first day that the SBA's Paycheck Protection program ramps up again with limited applications being accepted today for certain financial institutions. And so there are a number of different, there's a lot of information that's been going around, and we've distributed some ourselves. But we have a new partnership with Alpharank, who's president Carlo. And Carlo, I could think of two ways to pronounce your last name because you and I have not had the opportunity to meet before. I am a terrible gambler, and even with 50-50 odds, I lose most of the time. So I'm not even gonna say your last name. I put it in writing to everyone. If you want to say, obviously you can, but you're just gonna go by Carlo in my introduction anyway.
It works for me. Works for
But
me.
thank you so much for joining us this afternoon. We're proud to have a relationship to help credit unions with the Paycheck Protection Program and beyond with your organization. As I mentioned, the I guess it's the third round technically of the Paycheck Protection Program opens up again today, and we're pleased to have Carlo with us from Alpharank to enlighten us about the ins and outs of that new program and how it's going to work and what his organization can do to help you all out. If I've gotten my information correctly, the little research that I was able to do online, Carlos started with Alpharank in 2017 as Chief Operating Officer before becoming CEO and President in July of last year. So congratulations on that, Carlo.
Thank you.
Prior to his time with Alpharank, he led sales and business development at M Foundry, which many of you are familiar with, delivering mobile banking to about 400 or more institutions. And eventually that entity was acquired by FIS, that we're all familiar with. Subsequently to that, he led sales and business development for Truaxis, where he served as VP of Wholesale Data. And that was acquired by MasterCard, which of course we're all familiar with. Besides other work that Carlo's done in the fintech world, he's been doing this kind of work for 15 years. So he certainly has a lot of experience and a lot of knowledge to share with us. And Carlo, thanks for joining us today. And so we're just going to turn it over to you, and maybe along the way we'll have a few questions and we'll see how things go.
Thank you, Joe. I really appreciate it. Thank you for the introduction. So my name is Carlo Cardilli, so CEO of Alpharank. Just so you all know, we're a cloud software company. We focus exclusively on community banks and credit unions. We have about 50 plus clients. I think it's 54 at the last count. We have two businesses. One is flow optimization. So how can you get more new members, more new originations through your online system without doing anything extra in marketing? And the other business, this nascent business, is helping organizations with PPP forgiveness. Just so you get a sense of the scale at which we're operating right now, we are supporting about 25,000 PPP loans, of which just under 5,000 have been fully forgiven. So scope of what we're doing today is to walk you through the big changes in PPP. We call it PPP 2021. So we don't have to get into like a numbering discussion. Just this 2021 edition is going to be quite different from what came before it. Big headline, E-Tran is been taken out back and shot. There's going to be some changes in this structure for the first draw, for the second draw. Very important for you and for the kind of loans that you might be making in this 2021. There's a very new lender fee structure, which is going to be much more attractive for the kind of small dollar community supporting loans that you're going to do. And then I wanted to share some of the lessons that we learned in the 2020 edition of PPP, and then just throw it open for Q&A. I'm sure there's going to be lots of questions asked. There's still a lot of incomplete pieces with the SBA. As you might expect, these pieces are going to get filled in as we go along, just like happened last year. So the big news. CDFIs and MFIs, Community Development Institution Microfinance, they are starting today. In fact, the window opened at 9 o'clock Eastern this morning. And they're started making first draw loans today, and they'll start making second draw loans on Wednesday. Big question, well, what about everybody else? So if you look at the act carefully, you'll see that it calls out specific buckets of funding for specific kinds of financial institutions. So the expectation is that sometime over this weekend, they will open up the next tranche. Whether it's just going to be credit unions and banks sub 10 billion or everybody else, people are not quite sure. It was originally supposed to be the 18th, but then the SBA belatedly realized that the 18th is a public holiday. So the question is, are they going to open this up on Friday or Tuesday next week? What we learned last Friday is that there's a new form for origination, 2483. It's been updated with many new fields, and it's really, it's an update designed to simplify forgiveness so that the origination form lines up with some of the stuff that's required on the forgiveness side to get the loan forgiven, as well as a new form, 2483 SD, which is the form for the second draw. Neither form is going to go through E-Tran. Instead is going to go through a front end, which is going to be very much like the forgiveness dashboard. Actually, from a technical perspective, it's an extension of that forgiveness system. So your authorizing official can go in, log in, create user IDs, and allow your loan originators to originate loans through the dashboard, as opposed to having to go through E-Tran either directly or indirectly. The SBA will pick up the application at their end, do what needs to get done to put that into E-Tran, and give you a number theoretically within 24 hours of that application being submitted. So I think this is there's enough like big news concentrated in these few bullets, Joe, that I'm just going to take a second here and ask folks what questions they have just on this stuff. Is everybody muted, or can people ask questions?
I think most people are self-muted, but they certainly can ask questions if they like. And as a reminder, there's a chat box icon on the bottom of the screen. If you want to click on that, the chat box will appear on the right of your screen, and you can type in there too, and I'll be monitoring that while Carlo is
Perfect.
talking.
Thank you. All right, so let's talk about the big changes relative to last year's round. So the important part, especially for the folks on this call, is there's a $15 billion set aside for institutions just like yourselves with less than 10 billion assets. Other important aspect is that borrowers can come back to the first draw for an unused amount. So hypothetically, let's say that your business that has an average monthly payroll of $30,000. So that makes you eligible for a $75,000 PPP first draw loan. But for whatever reason, you didn't feel comfortable about the rules, you didn't feel comfortable about forgiveness, you just went and got $45,000 under that first PPP. Well, you can come back for the difference, and you can come back for $30,000. Some folks out there reduced the loan that they were asking for because they already received an EIDL grant. Those folks can come back and get that extra 10K in that first draw. So lots of interesting possibilities for your first draw borrowers. Also, anybody who got a loan using Schedule F, there's been some substantial modifications to how you can compute the loan amount if you're Schedule F filer. Long story short, you're using gross income, not net income. So if you're a farmer or a rancher, and it being Vermont, my mental picture is lots of farms up there. They can come back and get a bigger loan using that methodology. All right, then on the forgiveness side, formal elimination of the EIDL advances. So those who've been involved in forgiveness have seen that was one of the big bugbears in forgiveness. The borrower had to declare if they got an EIDL advance and how much it was. The SBA would deduct that from forgiveness and leave both borrowers and lenders with these unpaid balances. All of that's been swept away, and the SBA is actually working backwards through loans already processed where the improperly, according to the law, deducted an idle advance and will be issuing refunds. Flexible covered period comes in. So in the old system, you had to choose either 8 or 24 weeks as a covered period. You'll now have the choice of any time range between 8 and 24 weeks, solving one of the big questions that folks had in forgiveness, which was, well, how can I file 12 weeks in when it says 24-week cover period? Now, the actual new form that supports that is not out yet. We expect that to be out next week, and we'll be making those modifications to our system. Also, they got rid of this alternative payroll cover period, which caused a lot of confusion. And we're also expecting a new form that will address forgiveness under $150,000. So that replaces the need to submit documents with some additional attestation, plus 3 new fields which borrowers will have to fill in, which basically goes to help the SBA show that this program actually saved jobs. Many of you will have read there's been significant expansion in the covered expenses, so you can deduct cloud services. For example, if you have an email marketing provider and you're a restaurant to keep in touch with your patrons, that's deductible. You can deduct personal protective equipment. You can deduct safety modifications, as well as any riot damage you may have incurred. These loans are now fully tax deductible. That's been taken care of. The one thing that we did not like in the legislation that was passed is that there's no look back for loans already forgiven. So that's a bit of a downer, but taken as a whole, this act has been very, very productive and supportive of community financial institutions. On the second draw, and this is the part that's super interesting, they changed the qualifications of the program to make sure that community lenders are able to make the loans to support the businesses that need them the most. So eligibility has been lowered. It's now less than 300 employees. Was 500 before. There's going to be a needs-based test. So the borrower has to show that receipts, and this could either be cash-based or accrual-based, that they're 25% lower in any quarter in 2020 as opposed to 2019, or if you can show that overall 2020 revenue is lower, 25% relative to 2019 through your tax filing, that's also good enough to be able to show the need for the loan. And the other thing is that you have to just sign that you must have reasonably expected to use your first draw before you get the second draw. You don't have to get forgiven, just that you have some expectation that you will fully use it. The amount that you can borrow is the same, with exception of the NAICS 72 businesses. So accommodation and food, essentially hotels, restaurants, casinos, they can borrow 3.5 times their monthly payroll. And these loans are going to be capped at $2 million. So we're going to keep some of the larger entities from participating, which is reasonable given what happened in 2020. The one wrinkle in the second draw is that documentation of receipts reduction may be shown on origination. If not shown on origination, it has to be shown on forgiveness. Any lenders on this call who are thinking of participating in the second draw, I would strongly recommend that you get that documentation up front so that you don't run into a problem in the back end and then end up with a loan that can't be forgiven and sits on your books at 1% interest rate. Last piece, I think, of major interest is the change in the fee structure. So the objective here was to incentivize small dollar loans. They were unfairly low, I would say, on that first round. The SBA did not expect that large number of low dollar loans that credit unions in particular made to borrowers. So basically, any loan less than $5,000, your fee is half the principal. Between $5,000 and $50,000 is flat rated at $2,500, and then it's 5% thereafter, and it graduates down. So This fee structure, in my mind, makes a lot more sense for credit unions, and I hope you share that assessment. So let's talk a little bit about what we learned from last year. On the origination side, last year was an absolute madness, especially at the beginning. And then as the program got reloaded, it got much more reasonable. I don't expect a repeat of that stampede on origination this time around. However, the one place to be careful is be very careful with loan documentation, especially when it comes to borrowers not maximizing their loans their first time around. There's a very clear FAQ from the Treasury as to what documentation is required on the origination side. Make sure to stick to that to the letter, and that will put you in a good spot when it comes around to forgiveness. On the forgiveness side, we found that many borrowers were scared of the process, and it turns out they're pleasantly surprised once they get through forgiveness and to see how smooth it can be. The top performer amongst the community institutions that we support has gotten 80% of the loans into the forgiveness queue, and 70% of them paid out. So, the SBA has held to their 90-day review process and has generally been, quite good to work with on the forgiveness side. We saw a huge slowdown late in December, but actually I'm happy to say that between the first of the year and last Sunday, the SBA really ramped up the processing of forgiveness, and we just saw 500 loans approved over the weekend. So they're doing a great job. I think the key to this, if you're a lender, is to really sort of double down on borrower messaging and education, and really get some case studies, get some quotes, get some testimonials out amongst your membership about how smooth this process is. And I'll share some of the quotes that we've gotten from folks who participated. This is a guy who got a loan from one of the CDFIs that we support, and he liked the forgiveness process so much that he actually took the time to look me up on LinkedIn, find out my email address, and send me a thank you note. But this is some of the other stuff that some of our credit union customers have seen. And it's important to get these kinds of testimonials back out, perhaps on your website, perhaps in an email newsletter to your members, and just let them know, we're getting people through the system. Forgiveness is not scary. This money's here to help you get through the pandemic. Please go ahead and make use of it. This is a good process, and it's working as intended. And in fact, I noticed that we have a couple of folks from NEFCU who support forgiveness on the call, Penny and Colin. So Penny and Colin, if you'd just like to share with your colleagues the whole sort of origination and forgiveness process and what your members have sort of shared back with you, I think that'd be very helpful for the people on this call as they ponder what to do in 2021, first draw, second draw.
Yeah. Hey, Carlo, it's Colin. I'm happy to jump in there. So, we were, as NEFCU, we were a little bit late to the game in the first round. We weren't able to get PPP applications until about a week after applications opened up for various reasons. And so we sort of learned the process as we went along, and, trial by fire, and we're able to help a good number of members out through the first two processes. And when it came time to look at forgiveness, we were sort of scared by the daunting task of, oh my gosh, how are we going to do this and do it manually as well? And so we looked at a couple different providers, and Alpharank was one of them, who we ultimately and came as actually as a recommendation from the league, honestly. And we ended up, choosing to go with Alpharank. And Penny's on the call. I think Justin and Denisa are also on our call here, and I'll speak for all of them by saying that it was probably the best decision we made in terms of our PPP process, from the institution perspective, but also us as a lender or lenders, and our borrowers have been very, very happy with the process. number of situations where we've had borrowers say to us, well, I got the application filled out. I'm just going to send it to you along with my supporting documentation. We're like, no,
Oh, don't do that. Please don't do that. Right.
let us walk you through the process. And, they did it with ease and, left smiling afterwards. So we've been very thankful. It's been a great process. Carlo and his team have been very responsive and helpful throughout that. And Carlo, if I may, just ask a clarifying question,
Please.
about this round and the second draw. It's unclear to us, or at least unclear to me, who's a simple Simon, on how a borrower would qualify for a second draw. We understand that they, can use 2019 or 2020 payroll, correct? Is it possible that they use the same base period, 2019 or 2020, to qualify for the same loan? In other words, could their second draw be the same as their first? It's just a duplicate.
Yeah, it's basically it's basically the same. So if you qualified for a loan under the original version, the only thing you have to do is basically pull out your financials. So you would either pull out your revenue as prepared by your CPA, or look at your receipts. Could be your CPA, could be your bank account, and then basically ask yourself, first question: are my 2020's revenues or receipts 25% less than 2019? And you just do it on a year basis. And if the answer is yes, you're done. That's all you need to show. If the annual numbers are not 25% or below those of 2019, then you'll look at them quarter by quarter and say, can I make a showing that on a quarterly basis my revenues are down? And for a lot of people, you'll find that Q2 or Q3 in particular, were most affected. Maybe depending on which part of the country you were in, maybe Q4 was the one where you took the biggest hit. Now, I know you all in Vermont have been at the forefront of sort of really managing this pandemic effectively. So I think your mileage will vary, but I'm sure it'll be easy. It's just an open question for your businesses on how best to show it. But the SBA gives you flexibility on whether it's accruals or actual cash received from customers, up to the business. Does that help, Colin?
It does. Thank you. It just, I assumed that's what it was, but it just didn't spell it out that way.
Yeah, it's it's tricky because the act was very unclear. The last guidance was not terribly clear either. But like with many things, SBA expect more of this to sort of trickle out as time goes on.
Yeah. Any further word, Carlo, on your end on when we may be eligible to start processing applications?
So last we heard was that it was going to be, we heard on a conference call, oh yeah, everybody else gets to go to the first draw system a week later. Well, but then, like I said, a week later, it turns out to be MLK Day. So, is it going to be like a Friday night surprise like the SBA usually likes to do, or are they going to shift it to Tuesday morning? But it's going to be somewhere in that time interval. So. And the way you will know, are you the authorizing official, Colin?
Yeah, I am. And I poked around on the site today. I see where I'll see that, but
yeah, watch for your email, because you will get an email notice when you're ready to go.
And I assume that once that is clicked, that I will then be able to provide origination ability for the lenders or the officials within the organization.
That's right. You'll be able to add users, check their boxes. Is this user able to originate? I think that's the default, and and go from there.
You guys are one of our user as our forgiveness platform. Will you guys be? Can we send you over our origination so you can plug them in for us?
That's a question that's been asked, but there's some really good origination solutions out there. So if you'd like to learn more, happy to talk to you offline, Colin.
Appreciate it, Carlo. Thank you.
All right. So I'd like to get some feedback from the folks on the call. First of all, how many are going to participate in this 2021 edition? Actually, how many participated in 2020, Joe?
So there are 19 credit unions in Vermont, and I think, with the addition of nephew, like Colin was referencing, who had not been an SBA lender previously, to my recollection, there are probably about six, maybe seven credit unions in Vermont that became SBA lenders and PPP lenders in
Mm-hmm.
that first round, that first go round initially. And I don't know if we've asked a question, John. John Cody, that works for me. You might know, but I presume that all of those credit unions are going to be active in this round as well. I was curious about asking them about, if they've had inquiries as of yet because it's been in the press,
Mm-hmm.
and I haven't heard that. Although I know there's a couple credit unions that have put out some information to members about the
Based,
process for this round.
based on our impact survey data from April through June, I believe we had 6 participating um,
Okay,
SBA lenders, or at least participating in the Paycheck Protection Program first time around.
thanks.
And Colin, how was it for you, the process to become an SBA lender as a newbie? Would you recommend that to your credit union colleagues in Vermont?
Well, I don't know. I mean, anytime you're dealing with the government, it certainly has its challenges, or at least it did for us, I guess. But yeah, I mean, it's a form that gets filled out and sent in. Doing it in the beginning of PPP was probably not the right time to do it, but we did it and we were successful, and we're now an SBA lender. So, but I think it would be a much smoother process. I think the SBA's done a few things to make it easier for folks to navigate because they want people to be able to access these funds.
Yeah, and I would say just as when I put my outsider hat on, there's just a tremendous amount of like pent up demand. So here's a little story. So I was snowboarding yesterday. So up in the mountains, on a chairlift, was talking to some guy, and he asked me what I did. Yeah, we're do this in fintech. Yeah, we're doing a lot on PPP. He goes, tell me everything about PPP. So it turns out that he operates a business where his revenue just plummeted. So he's now working part-time at a ski resort. And he was not able to get a PPP loan because his financial institution didn't offer them. He tried to get in through Chase, couldn't figure it out. It seemed too complicated, wasn't sure about forgiveness. But anyway, I'll be working with one of our lenders here in California to get him a first draw loan. And he's automatically eligible for a second draw loan because his business almost ceased to exist. But just speaks to me that there's just a lot of uncertainty out there, and business owners are not necessarily really up on this because perhaps like you, Colin, is like, hey, I'm dealing with the government. Are there some hidden strings attached? And I think it's really important to get the message out to the membership that this program is actually working as intended, is getting funds out to businesses. On the first round, anybody who got approval, got funded within 10 days. The money was there, and forgiveness has been sort of relatively painless affair, and now they can come back for more. So I think anybody who's eligible and hasn't applied for first draw, should definitely be going there right now, and I'd be proactive towards your membership and let them know that help is out there. Just reach out and grab it. So with that, let's talk a little bit about the folks who were in origination or perhaps did not participate the first time around. What concerns did you have that may have stopped you, or maybe made you go in a little bit tentatively in 2020? Anyone?
Not an uncommon response.
Okay, well, last webinar we did with that was just that actually just prompted a whole sort of raft of questions. So,
yeah. My wife owns a small bookkeeping business. Has a lot of clients that range from very small to
Mhm.
relatively large by Vermont standards.
Mhm.
And so I hear both the small business owner perspective, through her a bit about what her experience or their experiences were in asking her questions and whatnot, as well as, in my job, the
Mhm.
lender side of things from the credit union world. And it seemed like in that first round, and this certainly affected, Colin's commentary about, nephew's initial involvement and whatnot. Um, there it seemed like, to me anyway, announcements were coming out from the federal government before things were fully baked and everything from
Mhm.
an
Mhm.
operational perspective and whatnot. And it's pent up demand is trying to access processes that aren't fully cooked or maybe they're not tested yet and so on and so forth. So I think there was a lot of apprehension through, all of that whole period of time, and it got better the second time around. And this time, not being a lender myself, but just from the type of information I've been reading leading up to
Mhm.
whatnot, it seems like things have finally gotten, more advantageous and better thought out and whatnot procedurally for both small lenders like credit unions as well as certain borrowers and whatnot. So I'm hopeful that credit unions are going to participate, and that they're getting, um, inquiries or will get inquiries from their business members. Um, but I was going to ask the credit unions on the line, if they've gotten inquiries from anybody. I get to participate in a video call pretty much every week with the Vermont Agency of Commerce and the Treasurer's Office, so on and so forth, and the SBA and whatnot, getting updates on where things are at with this program, and then other state level programs that they've introduced to fill some voids and whatnot that this program or the EDL program wasn't meeting and whatnot. And I keep hearing there's lots of demand still sitting out there, lots of void to fill.
Mhm.
But I
Mhm.
haven't heard from credit unions leading up to this round that they were continuing to get lots of demand. So I'm curious about that, to hear if they're getting their doors knocked on by businesses in Vermont.
Well, it's Donna from Vermont Federal, and we've certainly have gotten a lot of calls, a lot of folks looking for more information, explanation. So we anticipate, we certainly won't see what we did in the spring, but we do expect that we'll have many more people interested.
Great. And can I ask Donna, and I don't mean to take over the questions, Carlo, but I'm also curious about of those people that got loans, PPP loans through your institution, not just for Donna, but for any of you, have they most all applied for forgiveness, or is there much of that still sitting out there?
We still have quite a bit of, even though we've gotten a lot through, we still have quite a bit that still need to go through.
So,
Same.
Carlo, I'm sorry, go ahead.
No, I was just going to say, Joe, we're about the same. We're about to crest the halfway point on forgiveness
Really? That sounds like a lot left to go.
from round one, and we for round two, our emails and phones started pinging on I don't know, December 22nd, whatever the day after they signed the bill.
Yeah, exactly.
Carlo, I got the impression from earlier on in your PowerPoint that it sounded nationally like about, I don't know, maybe 20% of the loans that had been issued from the first two rounds had not gone into had not been forgiven yet. And so this might be just me, but I was just curious, just from an information standpoint, whether that's because the vast majority of that 20% haven't applied for forgiveness, or is there some percent of that that's actually been declined? We don't
So
hear
Joe,
about that.
it's more than 20%.
Oh,
It's about half, and
wow.
there's really sort of three causes. First of all, there's naturally going to be what we call like a bimodal distribution. There's going to be people who want to take care of forgiveness as soon as possible, and there's people who's going to leave it until the last minute, just like with taxes, right? there's the early filers and there's the guys or gals who wait until the last possible minute. That's the first thing. Second, there's a lot of uncertainty that was created around the tax deductibility issue of PPP loans. The IRS actually came out with a formal ruling saying, these loans are not going to be tax deductible, whether you file now or in 2021. And then of course, Congress came in and, overwrote that. So I think that was one big question that had to be resolved. And then the third aspect is, this expedited, simplified forgiveness for loans under 150,000. We're still waiting to see what this looks like. The SBA did what it could. It took an act of Congress to literally, it was required from a legal perspective to get that through. And they're going to come out with a new forgiveness module. Obviously we'll update the system that we make available to NEFCU reasonably quickly after it comes out. We expect it to be out Wednesday of next week, published by the SBA. So we'll need some time after that to adjust. But that's the other thing that has slowed down forgiveness. If this thing is going to be simplified, then why should I file now? I'll wait until that thing comes out. A lot of CPAs are telling their clients to wait. So those are the three causes I would say for forgiveness not going as fast as we'd anticipated. So, it'd be interesting to see what the folks on the call think too, because they've been at the other end of this, looking at their loan books and thinking, man, a lot of these loans are 6 months after origination. Do I, what do I do about interest? What do I do about these payment schedules? Do I go in and modify these loans? Am I going to get these things off my books? So, thoughts from the folks on this call on forgiveness and the speed of forgiveness? All right. Well, I'll take that as confirmation of what I just said, that nobody is going to jump out and contradict me.
Your comments, Carlo, are so insightful and on point that you just leave people speechless.
Thank you. Well, good. Well, that's the material that we brought to share with the folks on this call. So Joe, Christine, thank you so much for having us. This is our contact info. Folks want to reach out afterwards, feel free, whether it's a question of origination, a question of forgiveness, question generally, how do we deal with the SBA, and what's the gossip? There's so much of this information that comes through secondary channels you wouldn't believe. So we're just frankly just fintech nerds. So we love talking about this stuff, whether it has to do with what we provide or not. So feel free to reach out. But Joe and Christine, thank you again so much. Colin, good to be talking to you, and thank you.
Thank you, Carlo.
Thank you, Carlo.
Hey, thank you so much, Carlo, for sharing your expertise and your knowledge and your experiences that Alpharank has had in this whole PPP process.